And I'm heavily emphasized in silver, double silver ETFs, and silver miners. To a much lesser extent, gold and gold-related miners. I think silver could easily take out the old phantom highs at $50 of 1980 and 2011, which are, like ages ago. They're almost meaningless. Why? Because the real value of the currency unit over those decades to the present has decayed so much, you'd probably have to be $200 silver just to match the real value of silver in 1980 at 50, okay? But I think we're going to surge to 60 to 70 between now and the end of the year, which is, say, a handful of months. Well, and I think gold will go up during that time, but nothing like what silver is going to do. Now, is that the end of it? No, that's not the end of it. That's just an acceleration phase out of this underpriced metal. I won't give you the story. In other words, a fundamental story. We look at the technicals. I mean, I know what the fundamental story is. It's the ongoing degradation in the money units, fiat currencies. Doesn't matter which one. They're backed by nothing. And ultimately, over time, gold and silver hold their value for an investor. In recent years, silver's lagged gold a bit. In other words, they both made major lows in 2015 and have advanced significantly since then in an arm wrestling manner. In other words, it's been, if you're too focused on what this month or next month's going to do, you're panicked out of the market, every other month. And there's many technicians out there who encourage you to exit the market because it's a top or it's going to correct big, et cetera. But actually, it's been now 10 years and gold has gone from 1,050 to, 3,500. So ongoing with, it had a 20% correction in the middle of that. But silver has lagged, especially since 2020. Silver reached up just below 30 and then pulled back from 2020 to 2023, while gold really went sideways, and therefore silver underperformed gold. That's changing, and I think it could change dramatically. And if you go back and look, for example, 50 years ago, and look at every year and figure out what is the price of silver in relation to gold, divide 1 ounce into 1 ounce, and what is that percent? And you'll find that 21 of those 50 years, silver was at least 2% of the price of gold. But right now, silver is 1.16% of the price of gold. It's coming up from a low that was below 1%. So silver recently has been very, very low. So you ask about silver, I think its prime dynamic right now is it's going to catch up to the mama metal, and it's going to outpace it. It's going to be the better place to be, especially, I think, between now and the end of this year. Well, again, if you go back 50 years and find what was 21 of the 50 years, not even bull market years necessarily, silver reached 2%. Well, if silver right now with 2% of the price of gold, it'd be $60, $70. Okay, divide, 2% of what the gold is. Gold's not stopping here. It's paused for 4 months. This boring sideways action. And it's going to re-engage as well. I think very soon you're going to blow out the recent highs and all the top pickers will realize, oh gosh, I messed up again. But silver during that 4-month period, what's it done? It's gone up nicely while gold's gone sideways. So the spread is shifting, favoring silver, meaning gold gone sideways, silver's gone effectively vertical for the since the April low. April low is 27.50, and we're now 39.50. Okay, so quite a move. It's going to continue, and if silver merely returned to the 2% level, I mean that would be right now standing still. It means it's going to almost double from where it is now relative to gold. So it's double better than gold right now. If silver merely returns to its more or less normal relationship to gold. But in bull trends in silver and gold, like in 79, 80, or 2010, 2011, in those latter years of the bull trends, silver went 8 on the upside. It went up to 3, 3.5, even one time up to 6% plus the price of gold. So And I say this is also going to be true with the gold and silver miners. They're going to outpace gold because they've underpaced gold for the last, well, since mid 2020. But I think it's indicative of the initial wave of doubt that there is in the U.S. stock market. No, it got up, made a new high recently. We're extremely negative on the U.S. stock market. I think it's topping. I think it's been topping since late 24, early 25. We're marginally above those highs, but I still think it's topping. But that money goes somewhere. And historically, if you go back and look at major bear markets in the stock market, you'll see gold did quite well. In fact, it was one of the few places to be during those bad periods. And to some extent, that's not just because money's moving out of the stock market and seeking a new home. It's also because central banks, whenever the stock market starts to implode, they will naturally start to cut rates and do anything they can to liquefy the system, to protect those assets that they deem worthy of protection. They don't care about commodities. Heck with commodities. Corn farmers can go broke. We don't care if price goes up there. But we got to keep the prices of stocks up. Okay. Also, when the stock market turns down, that's when the data points, things like unemployment or economic indicators are indicating the weakening in the economy. That's when the data points go south. So the stuff that Powell's talking about that he needs to see before he can cut, bet on that happening after the stock market starts down again. And that's when they'll start to do what they always do. And if you go back and look at 2007 top, 2000 top, the dot-com, before the market really started to implode, the Fed started cutting rates. They'd been on pause for a year or two, and then they suddenly put pedal to the floor. Let's print the money. Let's do QEs, whatever. It did not help the stock market. That money flow went into monetary metals. And it's not that gold had to wait for that event, because it's been rising for 10 years. Again, it's an issue that over decades and decades, gold holds its value to the degrading money unit. And all you got to do is look at an M2 chart. Federal Reserve of St. Louis, they published. Okay. It's just like an upward
go back to
economics.
Macro 101.
In other words, they're destroying the money unit. It's backed by nothing but hopes and wishes and lies. And gold holds its value. And young kids today haven't learned that, but their granddads knew it. And so the granddads no doubt told them, you should buy gold. Well, now maybe the kids are starting to realize maybe I should have. I think we're at that point. But I think it's going to be different. We can get into that later. Well, we have all asset category subscription, which we cover all four major asset categories. And that's very important today because gold is not on its own. I mean, you've got to watch the government bond market, the stock market, as I said, as it starts down, that money goes somewhere and it always goes into gold. So that'll help accelerate the monetary metals. But in case of the silver miners and gold miners, we do put out a monthly report to our subscribers, in which what we do is we go through like GDX or SIL, the ETFs of some of the silver and gold miners, and look for outperformers. And by that, I mean, we don't look at the price chart. We look at a spread chart versus, let's say, Pan American Silver versus the GDX or Coeur Mining, the silver miners I'm talking about here, versus GDX. Are they trending stronger than GDX? And we plot the spread, and the spread chart is the relationship between those two. And we select maybe a dozen, 15 each month that look to us like the better places to be within the broad basket. You can always just buy the basket and you'll do fine, GDX, SIL. But my emphasis right now is actually the silver miners, just like silver has been underperforming gold since mid-2020 and now is starting to turn. If you look at silver miners compared to the gold miners, they also underperformed the gold miners. But that spread is now turning up, favoring them. So my personal emphasis is in the silver miners. So I've picked up 3 or 4 that I think are better. They're the bigger silver miners. I'm not going to specify what they are because it could change over time. But I'm emphasizing ownership more of silver miners than gold miners because like silver, I think it's going to beat gold. I think they'll beat the gold miners. But the miners in general look like a far better place to be than gold. In fact, if I were to give you a number right now that might occur over the next, I won't say by the end of this year, but over the next year or two, it would be easy to see the miners triple in relative value to gold from where they are right now. Meaning, as gold goes up, they go up 3 times as much. And this is a technical assessment. It's not a gut feeling. So I think that is the better place to be, and silver is the better place to be than gold, although gold is the mama. You need to watch her. But right now, anybody who's concerned about a downturn in gold, forget about it. Even the price chart action since April is not ever the way gold tops out. When gold makes a peak, it makes a peak and it drops hard. And then you may try to get back up to the peak, but you never do. 2011 is a perfect example. Same is true with the low in 2015. Once you made that low, you didn't come back to it. Well, look at the last 4 months in gold. It's a sleep sideways. That is not a topping action. That is a launch pad for the next up leg in gold. And silver's already not waiting for it, as we've talked about.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming. Young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.